Revenue enhancement. How is HSBC is doing revenue enhancements? How Development Bank of Singapore, Deutsche Bank, Standard Chartered, Lloyds Bank, Emirates NBD, Mashreq Bank, and First Abu Dhabi Gulf Bank, or some of the banks. I thought it's appropriate because so much has been focused now on the revenue enhancement. So let's look at one by one. So that global banks, regional banks, local banks are all coming to think of their revenue enhancement journey. They will target wealth management and commercial banking to drive double-digit growth, and as singled out Asian markets such as Singapore, China and Hong Kong, HSBC already generates the bulk of its revenues from Asia. For the next stage, they will focus on vast majority of the resources into the international corporate and institutional franchise in US. They will connect their US wholesale clients into international network. So the potential international activity with Doha Bank wealth clients also, we should look at it objectively. Now, when it comes to risk-weighted assets, we are pulling out of lower return business, global banking and markets in lower return geographies, Europe and the US, and redeploying into Asia in wealth and commercial banking and global banking Asia, because that's where the emerging trend is all about. And so risk-weighted assets in low return business, we have to stay away and put it in emerging markets. If you look at HSBC, the same story. When it comes to Development Bank of Singapore, bulk of the bank's loan book is in sectors like manufacturing and property, which are doing well. Now, sectors like F&B, food and beverage, and tourism tend to suffer. But if you look at the nature of our book, our actual exposure to these sectors are very small, shifting asset allocation to profitable sectors. Fee income growth led by wealth management fees, investing in banking activities, and card fees as financial market activity and consumer spending recovered from the a year before. DBS, that is Development Bank of Singapore, expects to double the number of members on its new platform for cryptocurrency trading to 1,000 by end December, and by this 20 to 30% annually for the next 3 years as digital tokens gain acceptability. Now, it remains to be seen where the rest of the world regulators, how they look at objectively. Let's take Standard Chartered or Deutsche Bank. Deutsche Bank corporate banking continues to offset interest rate headwinds through repricing strategies and growth initiatives. Growth initiatives are very vital. Private bank was also successful in offsetting interest rate headwinds with continued business growth. Asset management is focusing on ESG. That's a new trend. Asset management will focus on ESG. Standard Chartered, the transaction banking ops income down by year on year. Wealth management and retail products showed improvement in operating income. One bright spot for Standard Chartered was its often underperforming wealth management business, which saw a record quarter with income of to 21% on strong sales of foreign exchange and equities related products. When it comes to Lloyds Banking and Barclays Bank, Lloyds focus improved macroeconomic outlook for the UK. Lloyds, Britain's biggest mortgage lender, has benefited from a booming property market in the UK. So very important. Improved macroeconomic outlook for the UK, and Barclays Bank CIB business is well positioned to benefit from the continued growth in debt and equity capital market, with global markets and investment banking fees income up 36% since 2019, and our strong retail business are poised to support and benefit from consumer recovery. When it comes to National Bank of Dubai, customer loans, if you look at it, that's moving, and record number of personal loans, credit cards and mortgages, it's all moving. Non-funded income improved year on year with Q2, record quarter for the personal loans. And when it comes to increase in foreign exchange and derivative income and high investment security income, that we should explore. Foreign exchange and derivative income, high investment securities. When it comes to Saudi Arabia branch network to 7, they are scaling up Saudi Arabian activities, opening a third branch in Riyadh. Emirates signature multi-asset funds programs ramped with assets under management crossing over 250 million. So Emirates Bank, if you look at it, lifestyle-based applications grow in UAE base to over 470,000 customers and expanded the launch of Live. Prime, a membership based on offering premium lifestyle benefits. Now, when it comes to lifestyle, KSA they have created. Each country they have created grown to 75,000 customers. That's good. With the innovative pipeline enhancements planned by the rest of the year, they are doing very well. Branch presence is expected to move in Saudi Arabia and they will tap it. Let's look at Abu Dhabi, First Abu Dhabi Bank I should say, and Mashreq Bank. First Abu Dhabi Bank sustained results in personal banking. Higher contribution from our international operations following Bank Audi Egypt acquisition, that's moving in the right direction. Now, revenue from MENA region grows 67% in the second quarter and 51% half year, led by Saudi Arabia and Egypt, and now represent almost half revenues generated from our international operations. Now, when it comes to Mashreq Bank, Mashreq non-interest income to operate income improved by 50%, that is 47% as of June 20. Extension of TESS to June 2022 reflects this reality. UAE government program extension. Now, we should plan all these things. If you look at the opportunity, fee income we should generate through international trade, digital, personal banking, and again, we should also look at objectively see how we can capture the US, treasury market to our advantage, and we can take away many points. Potential in terms of international expansion plan, long term we have to build. We are doing analysis on the risk-weighted assets in low return business and geographies. We should do that. Shifting asset allocation to profitable sectors, wealth management and card fees to focus, improvement to non-funded incomes, promoting to our apps lifestyle-based applications, revenue profitability and GCC. So these are the major developments. Everyone is focusing on experience, lifestyle, and that's what we should give to our customers as well.